This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. It is Monday, and we have a new week. A lot of talk over the weekend on what happened last week. Why didn't the Fed raise rates? Do they know something that we don't know? Is overseas markets that weak? Are they just behind the eight ball? Well, either way, there's going to be debate and there's going to be market action. And we did see that on Thursday, markets sold off into big resistance as it became very overbought, and then we had some downside follow-through on Friday. So during the weekend, we wanted to see how the overseas markets would trade. So as of right now, you do have China bouncing, which has been a concern of ours, of our tape. So when China bounces and Europe is flattish, our futures, get a bid. So that's what's happening so far today. You look at the ASHR, which is like a proxy for the Shanghai, and overall this trend ever since breaking right around here in June has been to the downside. As first part of the year, it was a nice little tailwind above the 21 day, broke right here, and then pow. You had a little bear flag get developed right there, and then when it broke below that, volatility picked up, and now the question is, do we get another break of this lower range? So, volatility will probably stay somewhat subdued, until that transpires, if that transpires. As of now, the Shanghai was up almost 2%. You do have this resistance in the 21 day, which has been resistance right around here. So watch on the ASHR. If it can get above 33.50, you might get a squeeze to the upside, which overall could help, our tape. As far as overseas in Europe, it's mixed. There was a weaker than expected PPI out of Germany. That the DAX was down almost 0.75%, but it's rallied off that. As far as our markets, the question and the talk now is, do we have to retest the August 24 lows? Do we see 1867? Every bear out there is saying we have to. And at this point, you can't rule that out, but in order for this market to get back to the August 27th lows, which everyone's talking about, two things have to happen. One, you have to break below Friday's low, which is a point of reference right there. That is 1953. And then you have a very important 3-day support right here. So this is support 1, support 2. You also have this little trend that's been intact since those lows. So as of right now, even though we had this nasty topping tail into what we call defined resistance, it doesn't mean you have to get to here. So if you're just shorting based on that, be a little careful. As of now, the market, the oscillators were like plus 70 when you had this reversal, when they didn't raise rates. And then you had a nice downside follow through on Friday. So overall, a nice calculated trade. Same way if you took the wedge to the upside before that, you had 3 days of upside into resistance. It didn't quite make it to retest to 204, but the 2020 to 2040 was the level that we spoke about. So the question is, with the futures up 10, 12 handles, do you short the rally here? Or does all of a sudden most of this bar get taken back and then it looks somewhat constructive again? So if you go to the spiders, which a lot of us do trade, and you look here, I would say, again, if you want to write down points of reference, which I think are very important, you have Friday's low, which is 194.96, and then you have this gap support. This is really your spot to trade against. If we were to close below this, chances are everyone will lean short, and you could get a move down to the lower end of the range and maybe a possible retest. But as of now, this is still somewhat in check. So if you're that bearish, you could probably be very excited that we have a gap up today, because you might be able to, short the rally for some kind of H sell setup. If you want to look at the 5-minute and write down like resistance 1, 2, and 3, etc., you go here. This was, this was the move from, obviously the push around job it did on the Fed day. So that came up all the way up here. Obviously that's there. So I would say resistance 1, okay, if you're looking to short pretty quickly, comes in a little bit closer to 196.70. And I think we're probably, close to that pre-market. Then you have Friday's high. Okay, Friday's high comes in closer to, that's where the gap is. That is 197.56. So resistance 1, resistance 2. So if we get up here and the market rejects it on an active day trading basis, that could be your short, especially if it hits it and comes off hard. If it comes up here, you can't rule out it filling a partial gap. Okay, and if the bears want to have complete control of this market, and not go back to rangy back and forth, they don't want to see the bulls really reclaim, or even fill the majority of this gap. They want to keep some of it open. So again, resistance 1, resistance 2, and then you have a big gap here to figure out, what's next. As far as most sectors out there, they all look the same. They all went into big resistance, which was support in the summer. So support turns into resistance and failed. And then you had 2 downside days. And now the question is, what do you do? I would say I'm flat coming into today, because I didn't want to be short. I was short actually Thursday into Friday, which is different for me. But I said I'm not going to cover. I'm not going to hold it for the weekend. So as of now, this too, got rejected at the moving averages, had your downside follow through, and this is pretty much your key support to start the week, which is right around Friday's low, which is 105. So it's opening up. The question is, does it hold? Does today's move hold, or not? So what you want to write down is resistance, and this has been a relative stronger sector. So can the Qs get above Friday's high of 106.60 and actually hold above it, not just push through and tail and fail, but hold above it? If that's the case and it gets above that, chances are you're not going to see that much downside follow through. Remember, you had this outside day here. The next day, pretty strong, almost engulfed this entire bar and then started trending up again. So you want to see out of this day and a half, how much power do the bears have to contain the rally? And as of right now, the futures are up a decent amount. So write down 106.60. A close above that, you probably need to get back to neutral. As far as the bios too, pushed a little bit higher. I'll tell you right now, on Thursday, when the market came in after the Fed didn't raise, which I think they still should have. First of all, here are your trends. Boom, boom, boom. Here was one level of support. Look at the bios actually pushed through it, showing a little bit of power. So anyway, on that Thursday, didn't really come off much, and then came off a little bit on Friday. So if you look now for the bios here, these things love ascending channels, which you do have here. So as long as it's above this, can't get too bearish. I would write down, 350, this is 354 actually. So 354, 355, here is at 351 I was looking about, the way I wrote about. This is key support, okay, and this is more active support. So see if it holds or not. As of this point, this has been a stronger sector. It penetrated a lot further than other sectors. So see if it holds today's gap up. You do have resistance at 360. So if we were to get above this 360 and close above it, this looks like, again, relative strength spot, not a spot that's a headwind. A spot that's been a headwind has been the banks, right? You don't raise rates, that means they make less money, and that was the first group sold off on Thursday and gave you good downside follow through on Friday. So in today's futures, they're probably all up a little bit. Some of the Fed speakers came out and still said that they might raise rates in 2015, October, December, whatever. They were all jabbering about, could get some bids back into the banks, because investors love buying banks, but they need a reason, and they lost some of that reason last week. But anyway, you go to the XLF, big outside day right here into the Fed, right? If they raised rates, it probably would have acted very well. Instead, it was sold, and then you had a big gap down on Friday and into very big support. Okay, so the question is, do people think, okay, maybe they still do rates, let's give the banks a benefit of the doubt, and in order for the banks to get better, the XLF has to close back above 2290. You could fill the gap, and then all of a sudden all you have is a channel here versus a full-fledged headwind. So let's take a quick look at some of the banks while we're on them. Goldman Sachs has just been a laggard for so long. Goldman Sachs, banks like when Goldman Sachs leads, from here, you had a trend break right there when it broke the 8 and 21 day. Here's when it broke major support. Hasn't really found a friend since. Okay, on Friday, you had this outside day, which I think most guys that were looking to short a bank, they went with this one right there into the upper end of the range. Then you had your gap down on Friday above this. So the question is, today, for the the Bears will lose control. Like if all of a sudden Goldman Sachs doesn't, if it gets back above 183.30 and fills this gap, then they're not going to get much downside traction, in my humble opinion. So I think if they're up a little bit, the first thing they're going to try and do is sell the banks today. So watch the banks. If they could sell the banks and all of a sudden they start breaking below Friday's low of 180.55, then perhaps it'll give some clues that today's starting strength will be sold. So that's that for Goldman Sachs. So I'll give you a look at JP Morgan also. If the Bears want to take the ball back this morning, they probably want to sell off the banks that all have a small bid today. And if all of a sudden JP Morgan starts breaking this spot, they're going to be able to roar a little bit louder, which wouldn't be a bad thing. If all of a sudden JP Morgan starts to take out Friday's high of 61.83 and fill the gap, it could relieve a little bit of pressure, and then you have this inside box, and then we'll figure out what's next. If it hovers on the bottom half of it, next time market gets weaker, if this breaks, then that'll give some some clues to downside. As far as key stocks, though, again, last Thursday, Friday, in the weakness, some stocks held up well. Amazon was a beast. We talked about the buyable pivot in Amazon at 532, which was right here. And then look how the market came in. Amazon didn't come in at all. That showed some leadership. I think it actually hurt some shorts that thought that, oh, it has to come in because the market's going to fall apart, and it didn't, giving some clues that maybe the market doesn't fall apart. But anyway, here is that pivot of 532. It's now above it. If Amazon starts getting above this 547, that'll show that some stocks could have leadership and power, and I'm sure that'll keep a bid somewhat in the market. And then that high here is all the way at 580. So see if it can hold this inside range here above the prior breakout. That was a very strong stock last week. Google wasn't quite as strong, but also, didn't fall apart. Here is when, it broke this little wedge to the upside, still above it, still above the moving averages. So if you want to trade Google, trade versus 660, and then I guess see if it takes out Friday's high. We want to see if any stocks could take out Friday's high to give clues that, the market's going to hang in there or not. Apple started the week a little weaker. Okay, that gave some clues that maybe, the market could fall into resistance. Remember, first thing it started stronger, showing that perhaps the inside wedge could break to the upside, but then in here, didn't have any traction. But it did hold on Friday, and now it's up a little bit. So, let's see what happens here in Apple. Can Apple get above 114.30 and hold above it? If it can, maybe it starts to rebuild and fill in this little crack here, and then, also give us clues on whether or not we get upside or this breaks to the downside for a retest of those August lows. So again, opinions are opinions, but you need the clues, you need the vehicles of the market to help confirm them. Everyone's saying the market's going to get, crush and has to retest those lows, and if it doesn't, there's a whole different trade that goes on. And how it transpires is by watching your levels and seeing how it unfolds, and a lot of these stocks could give you clues of all that. Another name, NFLX. Actually, it was a pleasant surprise last week. That's where I made, I think, the majority of my money is when this red dog reversal happened right here. Everyone was selling it, and it did not go down. Then you had your second-day follow-through, and look at this. You even kind of held in there while the market pulled in after the Fed day. So at this point, I think you have a little mini downtrend here. And if NFLX starts to get above 104.40, perhaps it starts acting better. Okay, at this point, I'm going to focus on this a little bit to see if it hangs in there, and perhaps the market, if this starts getting above 104.40, just like I said, other clues, chances are the market's not going to be that weak. Citron, I think, came out with their negative note here, went down for a little while. Now I'm sure there's a lot of shorts trapped in here, so we'll see what happens in that zone. Also, another strong stock, Tesla. Tesla, in the morning call, I might know we gave you a buy, what's it called, pivot right here when it broke above this 255. Hit a high Friday, came in a little bit, still not a heck of a lot, still held higher. So if all of a sudden this starts taking out this little zone 2, that'll show you that there is some market strength out there. If it goes from green to red today, then you'll know that it's not that strong. So we do have some of these names that did not fall apart when the market did. If the market was going to be that weak, all these names would not be able to hold higher, because in weak markets most stocks can't hold higher and you can't buy high and sell higher, which we were able to do a little bit last week. As far as some other names, FIT woke up, FIT. I think they got a big order from Target. They tried waking up this stock on 2 different upgrades. It didn't work then, and then all of a sudden, here it finally cleared the spot, cleared this pivot, and now it's back in place. So if you like playing FIT, at least there's some volume back in it, and it's off the lows, almost above the moving averages. Your next resistance is here. GPRO tried, but wasn't as strong, and there's a big Barron's article and how it can go a heck of a lot lower. I think it's down to about 33.70 pre-market. So I guess, see how much power Barron's has. Sometimes they're a little late. Up here is when it failed. Remember this nice inside range and this wide range bar engulfed this entire spot. That's what got us out of this name and away from it, especially from trying to buy it. And now, see what happens in here. This recent low is 31.30, so it's still about $1.50 above where it's opening. So see maybe if Barron's causes a double bottom and then, or not. So that's basically in the news there. As far as oil, I think Goldman Sachs late last week came out again for the second time saying they think oil goes in the 20s. Wouldn't be bad as far as the pump, but that wouldn't be good for the oil names that need some higher prices to make money. But anyway, you look at the USO, which a lot of us trade sometimes. Overall, if oil is going to get to the 20s and oil itself is going to break 44 to then get to 38 to get to the 20s, the USO is going to have to break this spot. Okay, so breaking this spot would confirm their thesis. As of right now, it's just a thesis, and so far oil has had a decent move off the lows, okay, which are day 1 right here, and it's been trying to flag. It actually looked pretty decent here before their call. But anyway, as long as the USOs hold 1425-ish, I don't think you could be just blatantly short oil. If it breaks this, then get out of the way. If all of a sudden, oil that's up today gets above Friday's high of, 1498, that would show you that maybe they don't believe in their own call, and who knows why they're saying it. But we'll see. At this point, you have a bit of a channel, on top of a potent move. So you have 14.25, and real quickly for the XLE. Not much to go on here except for here is your key support, which is that 62.50 going sideways. It's probably up a little bit with oil. If it stays above this, there's still a chance that some of these oil names act better. If not, and it starts breaking this level, you'll know that the broader indices are probably weaker, which AD lines might be negative, and then all of a sudden the test of the lows could happen at some point. Again, I think what's today? Today's September 21st. Oh, my birthday. 43 years old today. Guess I'm feeling pretty good. A few aches in my back, but anyway, September 21st is, what are we, three weeks into September. Historically, you get some kind of low, late September, mid-October, so we still could get some choppiness in the market. Big earnings aren't coming out for another 3 weeks, or 2 to 3 weeks, so there's some time. You also have that blackout period that I talked about that started late last week, so for 4 to 6 weeks, companies can't buy back their own stock. So I would continue to look to see where the VWAP is, for the daily VWAP, so you're not chasing things from the upside or to the downside. The weekly VWAP's been important too, on multiple days. If we're too far extended from it, I'd be careful buying. If we're too far below it, I'd be careful being short. They seem to always gravitate there. What the VWAP is it's the volume average price depending on your time frame. And typically big institutions want to get the price around it so they look good for their customers, so they have a vested interest of getting it there. BP from the chat, he's been teaching us a lot about it because he was an old school market maker back in the Spirit Lead days, and that's how they all conducted their business. So anyway, now we have no more market makers, but you have these computer programs that do fill the orders. So there's ways to look at things. So anyway, with that being said, it is Monday, futures are up. If you're coming in just ready to short this market because you think we have to test the lows, be careful. Know where resistance 1, 2, and 3 is. And I think we look to see if these strong stocks get above Friday's high and continue to be strong. That'll give us some clues that the market might not fall apart. Also, the weaker sectors that the bears are leaning on, whether it's oil and the banks, see if they bounce and could hold today, or do they go red and provide some pressure. And these are the things we're going to be looking at as the day unfolds, and these are the things that can give us clues on how to position ourselves intraday and for the week. This is Monday, the morning call. I will not be at the recap. I got a fundraising charity tournament out in Millburn Short Hills. If you're around that area, we're playing cornhole, beer pong, watching the Jets hopefully beat the Colts, and then all of a sudden you have Yom Kippur Tuesday into Wednesday, but I'll be in tomorrow morning to provide some insight. Have a good one.